You are watching Notepad. I'm your host, Ibrahim Sani. This interview is brought to you by Bursa Malaysia. We've seen a resurgence of interest in terms of retail investors as well as institutional investors in the Malaysian equity capital market business. Of course, we want to talk a little bit more about the challenges that lie ahead and perhaps some opportunities that can be found on Bursa Malaysia. Joining me is the CEO of Principal Asset Management Berhad, Munirah Khairuddin. Munirah, thanks for taking the time to speak with us. Let's do a little bit of a review of how you feel Bursa has performed and, of course, what you think investors should look out for moving forward.
It's been a fantastic year for Bursa, and I think it's a year that that we've really managed to triumph amidst regional markets and even global markets to an extent, and the resilience of our capital markets. So I think Bursa has done very well, and planting firmly into very important sectors like healthcare and technology and plantation. So 2021, to your question, I think the question is we want to see more broad-based, across the whole markets, consumer discretionary, right? Maybe a return in the banking sector.
Let's talk a little bit more about some of the products that you guys are pushing right now. Because if I'm not mistaken, I read somewhere along the lines of investor education. Is that something that you guys are actually going to pursue quite extensively?
Yeah, we do a lot of investor education. We've recently even started, Principal Foundation has sponsored the urban poor children, targeting them with simple investing kits. So I think how to invest should start from very young. So we've started that.
Is this the Heritage Series Retirement Fund?
No. So we didn't really publicize as much on our foundation work, but quietly but surely, we're trying to help students and school kids learn more about how they can save and invest. So retirement series and all kinds of webinars and virtual conferences. We've been very, very active in that.
Okay, let's talk a little bit more about the fact that CDS account openings has been skyrocketing since the MCO started, indicating that a lot of retail investors are pouring into the market for the first time ever. And this brings about new challenges because a lot of investors might not be fully aware of the risks that are involved. What would be some of your comments to those individuals that are currently watching this and perhaps just opened their CDS account?
Yeah, I think the stock market is a very exciting place. That aside, we really need to understand where you're putting your money. So we have this thing called a herd mentality. And a certain stock they like, and everyone's just pouring in it. So my advice is, you really need to do some research and really need to understand fundamentally and not be persuaded by your neighbor, your uncle, your auntie, or go invest in this stock. So you really need to really understand what you're investing in and know what is the downside to that. So if you can stomach, I call it that, you can stomach that loss, then go for it.
Then therefore we have to think about asset diversification as well.
That's right.
Unit trust is a good place to start. There's also other places that you have, safe but low returns kind of scenario. Do you feel that now is the time for them to invest in the stock market per se?
So in the last, I would say only in the last maybe 2-3 months, since July actually, we're starting to see very strong net inflows being, sales minus redemption, net inflows into our unit trust funds. Whereas stock market has seen net inflows, from pretty much, second quarter of this year, right? And so it feels that there's a slightly laggard in the unit trust space. And I can tell you that net inflow is coming into Malaysian funds, into regional, global tech, that kind of themes, China, right? So I think unit trust is a good place for you to diversify. But if you want to build your portfolio of stocks, right? So, please try to diversify to a few sectors, because sometimes that, while the correlation is strong, But sometimes when you diversify, you do get, you know, if one is up, one could be down. So net on average, you know, you should do okay. But you need to be a smart investor if you want to invest in the stock market.
Let's talk about sustainable investments then.
Sure.
Because some investors would want to not just chase after the value, but also think about the sustainability of the investments they're making. There's a lot of movement right now, you know, predominantly pushed by the United Nations, GC, of course. There's also UN, PRI, and all the other international standards. Locally, Bursa, SC, even Bank Negara have been talking about investing sustainably. I know you guys are big on sustainable investments as well. Should the retail investor think about investing sustainably as well?
I think yes. Because, you know, when you invest in something, you need to have at least a mid to long-term view. And I think it's proven when you're investing in sustainable investments, you know, it's here to stay. And another element where we tend to maybe not remember as much is that, you know, globally, this is not just a trend. It's a real, you know, this is a real requirement by many investors that your business need to be, you know, sustainable, E, S, and G, right? And so when you think about portfolio flows, you know, a company that is sustainable is going to benefit from some of those global flows.
There's no trade-off, you think, in terms of investing in a sustainable company but might bring about lower earnings as opposed to companies that might not project themselves to be sustainable but could bring in higher returns. Do you think that that trade-off is there?
So, you know, I've seen stocks where we consciously don't come in because it has sustainable issues.
Oh.
And so we did suffer in the portfolio, right, because of not investing in certain stocks. But I can tell you, Ibrahim, that if you look at it from a medium term, those sustainable issues that we were questioning on, you know, did not go away. And I think a matter of time that the value erosion on that is going to be real. So if you're into an unsustainable stock for a quick return, quick buck, then you know, that's something else. But if you're thinking about investment in a mid to long term, you cannot ignore the sustainable factors, because things like governance is not something that, you know, if the company doesn't fix, it's not going to go away. It's going to eat on it, right? Things like, you know, climate stuff, right? If you don't ignore it, you know, there will be people like really angry and the bad name around your stock. People will just shun it, right? Maybe for a long, long time, right? If you're not ethical and etc. So I think those sustainable factors and investment is here to stay. It's not a fad. It's not a trend. It's here to stay.
Let's talk about some sectors that are traditionally spoken in tandem with sustainable issues. The extractive industries, commodity industries, they tend to be under the microscope a lot of times. But we're big. Malaysia is big on that, right? It's one of the major sectors for us to focus on. Because of that, the affinity for the retail investor towards these kind of companies in these kind of sectors are a little bit more familiar. Do you think that these companies have to buck up in terms of how they manage their sustainable practices?
For sure. I know you mentioned at your start about how, you know, institutional or pension funds and central banks and, you know, regulators alike are really pushing into this. And if you think about it, we're a big ecosystem player. So you get investors like ourselves, you know, fund managers, etc. And we are the smart investors that will invest in the companies. If this, you know, unsustainable practices and etc. is not, you know, fixed, money is going to find its place in, you know, so many choices, right? It's not just in our local stock market, right? It's everywhere. So smart money will find that, and if you don't buck up and change, I don't think, you know, your business model is sustainable.
I'll be remiss if I don't bring up this issue of foreign investors. It has been net outflow for the longest of time. Is this an indicator that foreign investors are finding that kind of smart money elsewhere outside of Malaysia? What is your view on this, and are you worried about this trend?
For sure. I think, you know, So you can see that emerging markets are starting to come back. Some, global managers are starting to be long on EM. And if you talk about emerging markets, you talk about Asia, money's been going a lot into North Asia. So China, Korea, Taiwan, a lot of money is going there. So for ASEAN and our own, local stock market, I think smart money, foreign investors are going to look for specific stocks, sectors that they like, and they're not going to be broad-based investing into, generally all the stocks in the market. They're not, because they're going to look into their benchmark, and they're going to really look into, what stock has growth, what stock has value, and all those other elements. So while foreign participation has been quite all-time low, actually, the fact that our market has been supported by local and retail, I think, we need to start to bring back that foreign interest, right? And I think we can, on the back of improved global supply chain, and if we continue to, strengthen in certain like tech sector, we're quite bullish on the stack, on healthcare, on plantation, consumer, but we need more, exciting themes and exciting stocks in the market, and I think we're getting in the right direction.
There's not enough, I suppose, players that are listed in the market right now. Most of them are private. And they would have their reasons on why they're not listing themselves. But is there a need for us to start talking to some of the corporates right now in the country, and perhaps even entice other corporates elsewhere to start listing, at least in the near term?
Yes. So I'm hoping that, if we can sustainably show this kind of performance in our local stock market, and sustainable is important, because when you list, it's all about fundraising, right? And how deep that market can support and grow. So we have that opportunity, I think, but we need to be very focused. So on Sharia, on sustainability, on all those factors, right? And institutional investor, institutional investors are a good anchor to this market.
Yes.
And if you can show this, steady participation of retail, then it makes the depth bigger and more exciting for companies to list.
Like I said, the perennial problem of big, asset managers, they are very actively looking for places to invest in.
Yeah.
And therefore, this is a good time for them to, I'm talking about the corporates, this is a good time for them to really look at the capital markets. But at the same time, there's a lot of scrutiny that is being brought about. As a private company, you can do whatever you want, quite literally, as long as you don't break the law. But is there an appeal towards these kind of corporates that if they want to grow and grow well and go international, they have to list?
Yeah, to your point, there's lots of private placement going around, and they don't really need to fundraise in the market. But I think, if you want to take advantage of digital, take advantage of consumer discretionary, and stuff like digital stocks and stuff, right? I think Malaysia has a lot to support that. Our mobile penetration, last I checked, is like 150% or something like that.
Yes.
So I think this mobile penetration, this gig economy, we are starting to demonstrate quite a resilience on it, right? Like e-commerce shopping, look at the e-commerce stuff, right? It's really growing. And another element I wanted to talk about is the periphery that supports it. So for example, your warehousing, the logistics, your your cloud investing. So whether we can attract those kind of companies, right, to have their cloud service here, your e-commerce logistics, I think those kind of elements are our proposition.
I was listening to an interview by the BlackRock CEO. He says that BlackRock is the world's largest warehouse owner. Of course, this is what he claims. I don't know how to cross-check. Do you think that that is something that asset managers have to do moving forward, to think about physical assets now to support that digital growth? Totally.
So in principle, Principal Financial Group, we have a very large and established principal real estate segment, if I'm not mistaken, close to $100 billion. And in that segment, we invest, from ground up properties, and we tend to move now towards those kind of assets, right? where, like I mentioned, like logistics, warehousing, cloud service hosting. So those kind of real estate investment and infrastructure is very, very appealing, Ibrahim.
All right. Okay, we'll take a short break before we continue our conversation with Munirah of Principal Asset Management. Thanks for staying on with us. I have with me Munirah Khairuddin, CEO of Principal Asset Management. Let's talk a little bit more about the risks that are involved. Government risk is a big deal for Malaysia, but I have come to a point where I think investors, both retail and institutional alike, are actually quite sedated in terms of how they view government risk in this country. What's your view on how things are happening in this country when it comes to government risk?
So I'm going to be apolitical. But from a factual point of view, government and political risk is something that we cannot ignore, right? It does have bearing on sentiment, and more importantly, it does have bearing on the direction, on policy, on the economic, future, etc. So it is increasingly something that we need to factor into our model when we whether we go overweight or underweight a certain
which is normal,
country.
I suppose. But if we extrapolate this to geopolitics, right, and the mega forces of the US and China and how a very small economy like ours are trapped in between, and we have all these companies, big tech companies, for instance, Alibaba and Tencent versus Amazon and Microsoft. We have the smaller issues like TikTok currently undergoing through some weird exchange right now in the US, where Oracle out of a sudden is putting themselves into the mix. That is, while it may seem so far away from us, it actually impacts us quite directly. How do you view that geopolitical events that are currently happening around the world, and how investors in Malaysia should react towards these kind of developments?
I think one interesting development is that China is decreasingly not or increasingly not paying attention to the US rhetoric, especially recently. And I think China now is just focusing on doing what they were set to do, and I won't underestimate them. So while there will be this US-China tensions prolonging, I think China is pretty steady about its plans of expansion, etc. So you're right, we are sometimes trapped in this, but I think we benefit from both supply chain, right?
Yeah.
The global, where the US is dominating, but increasingly China too, right? And so I think we will probably have to play on both sides, right? We have to play on both sides,
But
and we welcome capital on both sides.
Yeah, but neither countries would want that to happen because they would want solitary support from the countries that they work with. Do you feel that there has to come to a point where we would be coerced into deciding which capital is worth more to us?
I think most countries are staying on the sideline on making this firm affinity.
Commitment even.
Yes, so I think it's wise the way we're doing right now, in kind of being open to both, right? Because we also want to benefit from the expansion of Asia, right? A lot of companies, in North Korean companies, Korean companies and Chinese companies are here, and these are long-term investors, and as well as US. So I think we need to, play very well.
Right.
On both sides.
Final word before we end this conversation. What do you think people should be thinking about if they invest in Bursa Malaysia?
I think people should think about investing in longer term, and not just about making a quick buck, because this year has been quite special, where you can make very instantaneous return in certain stocks. But I think you need to think about a bit more longer. And it's okay to get hurt a little, But if you have a long-term view, you know, it will all kind of average out, and you should invest and not just save.
Fantastic. That was our conversation with Munirah Khairuddin, the CEO of Principal Asset Management. If you've missed any part of this interview, just head on to astroawani.com, look for Notepad over there. This interview is brought to you by Bursa Malaysia.